Yeah, ladies and gentlemen, welcome Commodity TV today for you here out of our COVID-19 home studios here from Switzerland. And also with me, I have in the USA, Tim Warman. He's the CEO of Fiore Gold, and he wants to give us, of course, an update on the company, but also a company presentation and insight into it. Tim, welcome, and thank God you look very healthy.
Thanks, Jochen, and hope everyone stays healthy and safe at home.
Absolutely. No, here's also everything perfect in Switzerland. Everybody is doing what the government said, and hopefully in 2-3 weeks, things are going a lot of, much better, I would call it. So if you can start up the presentation, please, that we can share the screen also with our viewers, that would be great. Fiore Gold is mid-size, or let's say small to mid-size gold producer, of course, here working in the US. And while Tim is setting up the presentation mode here, I want to tell you just that the company is really undervalued from our understanding and our due diligence we did so far. And we are very happy that Tim will give us now an insight. Tim, the floor is yours.
Thanks, Jochen. We'll just quickly transition through the disclaimer. You can find that on our website. Just a quick summary of Fiore Gold. We're a producer in Nevada. I'm actually headquartered here in Toronto with a small team, but our assets are all in the United States. The Pan mine has been producing for about 2.5 to 3 years now. We have a track record of every year increasing gold production. The company has a solid balance sheet and strong cash flow from Pan, and we're currently guiding somewhere between 45 and 48,000 ounces at Pan in fiscal year 2020. And just to note that our fiscal year runs from October 1st to September 30th. And I think that that strong balance sheet is really key given the current situation with the COVID-19 pandemic and a lot of projects shutting down.
But you're still producing, right?
We are still producing for now, touch wood, and it's all day by day, but so far so good. Mm-hmm. And so Pan is really the basis of the company, the starting point. But we have a fairly significant growth project in our Gold Rock project. This is what drives the organic growth in gold production, and it's interesting because it's a fully permitted project from a federal level, which is the long, complicated permitting process in the U.S. Mm-hmm. It actually took about 8 years to permit mining at Pan, but that's all done now. It was completed in September of 2018. And we're just about to wrap up the first ever preliminary economic assessment on Gold Rock, and that should be out actually very shortly. Mm-hmm. And then
so you can still work on the PEA. This is also not influenced by the virus.
Yeah, it's all office-based stuff at this point.
Okay.
All the field work's been done, all the laboratory work has been done, and really it's just the engineers and the metallurgists and geologists writing up their sections of the report.
Fantastic.
Mm-hmm. And then again, we're looking at some complementary M&A transactions, looking at complementary operations, typically aiming at open pit heap leach operations where we have a lot of skills in there and a very, very good track record in being able to operate effectively and efficiently, and really obviously trying to grow the company. We're looking at a first stage to get to that 150,000 ounce mark, both through growth at Gold Rock and through some strategic M&A, and obviously that brings a lot of benefits with it. Mm-hmm. And I should probably address the, what we're doing in terms of the COVID-19 pandemic situation. Obviously, our Toronto and Denver offices have been closed for several weeks now. Everyone is working remotely, and that's actually working surprisingly well, I have to say. In Nevada, where our mine is operating, currently we haven't seen any mine shutdowns there. Obviously, the biggest operator there is Nevada Gold Mines, the joint venture between Barrick and Newmont. And we're following their lead in a lot of ways because obviously they have a lot of larger capacity than we do to deal with these things. So we're taking a lot of ideas from them. Nevada currently has declared mining an essential service, so it's allowed to stay open. We're taking very, very strict precautions and monitoring at Pan. We take everyone's temperatures before they leave for the mine site each day. Anyone who's sick has to stay home for 14 days. We've instituted a lot of cleaning. We are adding a lot of vehicles so that people aren't packed together in vehicles when they travel to the mine site, and really just taking it day by day there. But really, I think Fiore is very well positioned for the current environment. We've done a lot of contingency planning. And of course, one of the things, again, going back to the strong balance sheet, we have no debt. We have cash on the balance sheet. We have a lot of good cash flow out of Pan. But even in the event that we had to stop mining at Pan for a period, we would have to leave a small team on site to manage the solution flow. This is a heap leach operation. And what we do is we pump a solution with a bit of cyanide in up to the leach pad. We sprinkle that on the leach pad, and then it goes through the leach pad, collecting the gold. It hits a plastic liner and then flows down a solution pathway back to the ponds. And then we run that solution through the plant. It's called an ADR plant. And we pull the gold out of it. Now, we can't turn that plant off because there's a lot more solution in the circuit between those ponds and the leach pad than we have capacity to store. And so we'll have to keep 2 or 3 people on site to keep irrigating the leach pad. And that means that we'll continue to produce gold. And as long as we can keep our internal refinery open, and again, that's a sort of 2-person operation, we can continue to pour gold. And one of the interesting things about a leach pad is that even if you stop mining and stop placing fresh ore on it, that leach pad will continue to produce gold for somewhere between 1 and 2 years if mining is suspended.
That means that you also need some security, right? Because otherwise it would be like self-service for gold.
No, one of the interesting things is that, well, we're a long way from anywhere. Keep in mind that, we're out in the middle of the Nevada desert in northern Nevada. And typically, Brinks comes and picks up the gold from site once or twice a week when we pour the doré bars, and they take it to the refiners. And again, even if the refiners have to shut down the refining, they've indicated that the refiners all have very strong balance sheets, and they've indicated they'll continue to pay us for gold delivered to the refinery. Obviously won't pay us 100%, but pay us a significant portion of it. So anyway, I think the point is that, there are a lot of companies out there that have a lot of debt that maybe aren't producing, aren't generating cash flow, that are going to have a lot harder time getting through potential suspension. From our point of view, I think we're in a fairly strong position and really a very, very good defensive stock with a lot of potential to kick back in if there were a suspension after it ends and hit the ground running and again be in a very strong position to go forward.
Great.
So I'll just talk a little bit about our operations. We are entirely in North America. We have Pan and Gold Rock, the 2 projects in Nevada. And we have another interesting project called Golden Eagle that's in Washington State that I'll talk a little bit more about. And then we'll have some news coming up in the near future. So Pan itself is a typical Nevada open pit heap leach mine. That's our solid production base. You can see here on the screen an aerial view of the site from about a year ago. 2 open pits, the North Pit and the South Pit, very imaginatively named. We truck ore from those pits, and I don't know if you can see the cursor on screen, but we truck it down to the area marked the leach pad there. It goes through a crusher and then is placed on the leach pad and irrigated, and you can see the ADR plant that I spoke about down in the lower left. Those 2 black areas are the ponds for the pregnant solution, which has the gold in it, and then the barren solution after it comes out. The reason they're black, by the way, is they're covered with about 1 million little black plastic balls to prevent evaporation and keep the birds off the ponds. So you can see over the last 3 years, we've continued to increase gold production. We had about a 20% increase year over year last year. And then as we go into 2020, we're forecasting somewhere between an 8 and 16% increase in gold production again. All-in sustaining costs at a corporate level sitting between $1,100 and $1,200 right now. That'll start to decrease in the second half of this fiscal year as the stripping ratio at Pan starts to drop again towards the life of mine average. The life of mine average is about 1.6 to 1. For the last couple of quarters, we've been mining it closer to 2 to 1 as we go through a heavy strip period. But that was in the mine plan, and as I say, we'll start to come out of that over the next few months. So again, we've predicting about 6,000 or 7,000 additional gold ounces in production this year as we put the crushing circuit into operation about a year ago. And now really with... So
are they already calculated in those, let's say, 48,000 ounces guidance, or would they be on top maybe?
No, that's correct. So we produced, I think, around 41,000 ounces in 2019. So we're guiding somewhere between 45 and 48,000 in 2020 fiscal year.
Yep. Okay.
So with the with Pan running well, generating cash flow, producing gold, the real focus now is on drilling for growth, continuing to grow the resource base, the reserve base, and extend the mine life. We currently have a drilling program underway. You can see a bunch of little dots there on that map, and those are all the drill holes we've been doing over 2019 and 2020. And all those red zones there are targets that have been identified by the previous owners of the mine, Midway Gold. They had identified those through mapping and sampling. There are gold geochem anomalies there. There are alteration that we can see in the rocks there. We can see the structure that controls the deposit, and that had really never been drilled before. So we're hoping to drill some of those targets really within the next couple of weeks, actually. It'll be the first time any of those targets have been drilled for the most part. But I think really the focus here is to grow the mine life. And we were very successful in 2018 with a drill program to grow the mine life, to extend the reserves and resources. And we're pretty confident that we can do that again.
Super.
So switching from Pan to Gold Rock. Gold Rock is our organic growth project. This is a 100% owned project. It's about 8 miles from Pan. You can see there's a small open pit there left over from the late 1980s and early 1990s. It was mined by a joint venture between Alta Gold and Echo Bay. It's had some very small production. And really what that open pit does is it gives us a nice 3D view of the ore body. You can see on the map here the distance from Pan to Gold Rock. You can see Highway 50 in the north there. That's the main east-west highway across this part of the world. So it's about 8 miles away as the crow flies. There's an indicated resource of about 238,000 ounces, an inferred resource of about 180,000 ounces. That resource will be updated as part of the upcoming PEA. One of the nice things about, again, I can't overstate this, is that all the federal permitting has been done at Gold Rock. That puts us at least 5 years ahead of any other similar project that's still in or about to start the permitting process.
Can you use then the Pan mine equipment, saying the infrastructure? Because if I look at the map here, this is like approximately 10, 12 kilometers only away, right?
Yeah, that's correct. And we'll use a lot of the existing infrastructure at Pan, and I'll show you a bit of that on the next slide. Obviously, we can't truck ore that far. That's too far to truck, relatively low grade ore. And in any case, we have to build leach pad space and put the ore somewhere. So we might as well just put it down at Gold Rock. Grades are about 50 to 60% higher at Gold Rock than at Pan, which is nice. And as I said, we've done a lot of drilling there. It's also part of a very long trend at Gold Rock. There's a structural and geologic trend that runs for about 16 kilometers from one end of the property to the other. The current resources only covers about 2 to 3 kilometers of that strike length. And there's a lot of exploration targets, again, defined by geochem, by structure, by alteration, by mapping. And this is one of the reasons why Kinross Gold came in and became a strategic shareholder of Fiore back when we acquired this project, because it's very similar in geology to their Bald Mountain mine. And Bald Mountain mine is about 80 kilometers to the north of us, in virtually the same rocks. So, they like the exploration potential here. If we look at,
and as we know, geology does not stop at property borders, right?
No, not at all, not at all. And there are a lot of other companies that are looking in this very same geology right now. In fact, it's kind of funny. We've sort of become the descriptor in everybody's press release. They say our geology is very similar to the geology at Fiore's Pan mine where they're producing.
Well done, well done.
So here we see Gold Rock down in the lower right, and Pan up on the upper left there. And again, we'll use a lot of the same infrastructure down there. So what we envisage having down at Gold Rock is the open pits, the leach pads, probably a processing plant down there. But we'll use a lot of the same facilities in terms of the access road. So the access road from the highway will be extended from Pan down to Gold Rock. The power line is that yellow dashed line coming in from the left-hand side there. That's the existing power line for Pan. That will be extended about 3 or 4 kilometers down to Gold Rock, so it already runs very close to Gold Rock. And we'll also use a lot of the same processing facilities for treating the carbon. So we'll load gold onto carbon at Gold Rock and then transport that carbon up and use the stripping and the regen facilities and the refinery and the assay labs. We'll have the same management team. We'll have the same admin team. We won't be building a lot of facilities for personnel down at Gold Rock, because it's more of a satellite operation than it is it's not really a new mine at all. And then also, that's also very helpful in terms of financing, project financing, because when we look at typical project finance lenders, what they really like about this project is there's already a successful cash flowing operation right next door. And they really look at this as more of an expansion project as opposed to a new build. And of course, we've got a track record of being able to run it effectively and most importantly, running it profitably.
And also, I could imagine that the capex is much cheaper than for the Pan mine because you have a lot already.
Exactly. So I think the capex for Pan was about somewhere on the order of over $100 million, and we certainly won't get to that at Gold Rock.
Will be much cheaper. Yeah, that's great.
Yeah. And I'll just talk quickly about our project up in Washington State. This is the third project we have. It's called the Golden Eagle Project, and it's up in the northeast corner of Washington State, just south of the Canadian border. This is a bit of an overlooked asset with lots of exploration upside and optionality. It currently hosts a historical resource of about 1.7 million ounces at just shy of 2 grams. This was done back in 2009 by Snowden, a big international consulting firm, and they came up with that total using a gold price of $750 an ounce. Now, as we know, gold price is a little bit higher than that. So what we've done is we've commissioned a new resource update using more up-to-date gold prices on that, and we should have that done in the next few weeks. And so we'll put that out as well. And I think we're looking hopefully towards something significantly over 2 million ounces there.
Tim, question: How would that influence, or let's put it that way, for our viewers which are not totally familiar what it means to use, let's say, instead of 750, you use maybe 1300 or 1250. Yeah. So what would it mean for your resource? That you can calculate more in, that you can, let's say, access lower grade, or can you please specify that a bit?
Yeah, it will take in some lower grade ore, obviously. That's I think 750, the current price of over 1,600 is more than doubling of the gold price. We'll obviously be a little more conservative than that. I suspect we'll use somewhere around $1,300 or $1,400 for resources.
Yeah, conservative is always good.
Yeah, exactly. And that should have a significant impact on it. As I say, I expect it to be significantly over 2 million ounces rather, but we'll see, as that comes out.
Yeah, of course, now, that's a forward-looking statement for the regulators. We are just guessing.
100%.
Yeah.
That's a sort of aspirational goal.
Yeah.
But as I say, we'll have that out in a few weeks. One of the interesting constraints about this project is that if we were to put in an open pit, which would be our plan here, the edges of the pit, so the ore body itself is entirely on our property, or rather the mineralization, but the edges of the pit would have to extend into ground that's controlled by Hecla Mining on either side of us. We have talked to Hecla about trying to come up with either a layback agreement, which would allow us to put the pit margins onto their property, or I think a better idea would be to try and merge the property with their project, because they have about 1.5 million ounces on their project right next door to this. And as well, Kinross Gold has a recently mothballed mill up in this area at their former Kettle River mine. So, ideally you could put a couple of these assets together and have a really nice project in Washington State. In the meantime, this project costs us $10,000 a year to hold on to. So it's really a very, very low priced option on some success here. But anyway, we're looking forward to the resource estimate here. A little bit on the capital structure. It's a fairly straightforward capital structure. There's about 98 million shares outstanding, about 31 million options and warrants. About 20 million of those are warrants. They're well out of the money and they expire in September of this year. So I expect those to barring a crazy rising gold price over the next few months, I expect those will be expiring unexercised. Fully diluted, currently about 129 million shares. At our last quarter, we had US $6.5 million in cash. We had US $25 million in working capital. And you can see that our market cap is about US 30 million. And so really our entire market cap is supported by our inventory and our working capital. So it's, we think it's a very cheap stock at the moment. Analyst really coverage, Stifel GMP, Stephen Sook covers us, Mackie Research, Stuart McDougall, and Jacob Willoughby at Red Cloud all cover us. So I guess just to wrap up, I think we've had a very good track record of doing what we said we're going to do. We got the Pan mine up and running and successfully generating cash flow. We've extended the mine life into 2023, and we're looking to do that again with an ongoing drilling program. We got the Gold Rock permit in hand for mining and processing. We've got a crusher installed and operating at Pan, and we've divested the remaining Chilean assets that came from a previous incarnation of the company. And really, I think we've kept the company with a very, very clean balance sheet while doing this. We haven't taken on any debt. We've done it out of our working cash flow. Coming forward, we'll have the Gold Rock PEA out very soon. We'll have the Gold Rock feasibility-study work that'll kick off very shortly. Obviously subject to the constraints around the current pandemic and what we can do in the field. but there's also a lot that we can do without leaving the office. Pan resource expansion drilling, that's currently ongoing, and that will carry on for the next few weeks. And then into the second half of the year, we'll take all that drilling that we've done in 2019 and 2020, come up with a new resource and reserve update and a new life of mine plan somewhere in the second half of the current calendar year. And then again, we'll have a resource update at Golden Eagle to bring that resource estimate into sort of present 43-101 compliant form, so we can talk about it. And then really looking at hopefully we can pull the trigger on some M&A particularly in the U.S. For similar deposits to grow the company in that way as well. And then I guess I'll just finish off with a nice shot of the Pan mine looking towards the north from the south pit.
That looks really busy, I would say.
It is very busy. You can see drills drilling, loaders loading, trucks hauling. All the good things. Yeah,
that looks really good. Maybe one final question. Let's assume you can do something on Golden Eagle with Hecla altogether. How would it look like? I mean, would you share, let's say, the capex to develop the project? Would you say, maybe we let Hecla do it and Kinross brings maybe the mill in, but we are participating in the profits? Do you have already any ideas?
Yeah, I mean, I think the best way to do that would, to be honest, would be to spin it out and have it as a separate company, with each company owning their pro rata share of the project. Because if you think about it, if we can get Golden Eagle up north of 2 million ounces, if Hecla in fact has that 1.5 million ounces, or maybe growing next door, you're starting to put together a resource that looks like getting close to 4 million ounces. You've got an already permitted and operational mill in the area. Obviously, it's not everything you need for mining, and you've got to go through the permitting process, which in Washington State, to be fair, is going to take a little longer than it, say, would in Nevada. But nonetheless, that's a fairly significant resource and a fairly significant asset in a safe jurisdiction in the United States that I think a lot of investors would really like, particularly when you compare it to things like Integra, for example, with a smaller resource on an older project there. Again, but we like the spin out idea personally.
Roughly spoken, how long do you think would be a development time frame? Do we talk about, let's say, 1 or 2 years because you have all the permits in place, or how do you see that? Just really hypothetical.
Yeah, so at Golden Eagle, just to be clear, the names are very similar. At Gold Rock in Nevada, we have all the permits there. At Golden Eagle in Washington, we don't have any permits there. So there would be a fairly long permitting process there. And so really probably you're talking about 4, 5, 6 years.
Okay, so we would say then this is let's say the longer term future of the company, and Gold Rock is the immediate future, to say probably to bring the company to 100,000 ounces.
Exactly.
Fantastic. Super. Tim, that was very, very compelling. Thank you very much. Very informative. And thanks for all the explanations. And we wish you, of course, all the best success. And I would say keep it going. And we look really, really forward to a very good news flow, of course. And thanks for putting that back to a very good news flow, I would say. And the most important factor to me is, on the one hand, you have enough money, you are financed, but still, even if you have to shut down, you make money because you have to produce. It's on the leach pads. So that means the company is not at risk, let's say, for the next 18 to 24 months at least. And we don't think that this crisis goes that long, because otherwise I think we have every other problem than the virus, honestly. But I think it's a very, very good and conservative approach you are running here. And this is really appreciated also from a shareholder view. And lots of optionality, lots of growth potential. And I would say the most important thing by now, especially for the next 6 to 8 weeks, is that you guys stay healthy and safe at home, and keep it going and feed us with some very good news.
Thanks, Jochen.
Fantastic. Thank you very much, Tim. All the best. Thank you. Ladies and gentlemen, that was Commodity TV for you with Tim Warman, the CEO of Fiore Gold. You heard it, a very, very fantastic story, very conservatively set up, and a lot of growth potential. To say, like, from 45 to 48,000 ounces, there is a good possibility to go probably to 100,000 within the next 2 years, I would suggest. And a lot of long-term potential to grow the company, really, like they have postulated, to 150,000 ounces to approximately the next 5 to 7 years maybe. And I would suggest you check it out because it's quite rare that you have a market cap which is covered by working capital and cash. And this is what we really like. And the company so far has no debt. So thank you very much. Bye-bye from Switzerland and also bye-bye from the US. And stay healthy. That's the most important thing. And all the best. Thank you very much.